Greetings, members one and all of the Salivation Nation. Pandemonium over a pandemic, and gold and silver are suffering as well. Let's explore. Yes, that's right. The World Health Organization has now marked the Mexican cerveza sickness as a pandemic. It's official, according to the World Health Organization, and the Dow Jones Industrial Average is suffering because of it. In fact, it is now technically in a bull market. Dow Jones Industrial Average has lost over 20% from its all-time high. It's 52-week high here. And right now the Dow Jones has completely erased all of the gains from yesterday. It is down over 1,400 points, down to 23,550 plus. And it is something else. Gold prices and silver prices are suffering as well. Before we really dive into those, let's check here this article from CNBC. Gold prices ease as investors cover margins. Gold prices fell on Wednesday after rising as much as 1.3% earlier in the session, as traders sold the precious metal to cover margins for stock markets spooked by the global spread of the Mexican cerveza sickness there. Spot gold was down 0.4% to $1642.98. And gold futures settled 0.2% lower at $1642.30. U.S. stocks dived, largely erasing Tuesday's gains, definitely erasing the gains, as traders were skeptical about President Donald Trump's stimulus plan to cushion the impact from this situation. The price action in gold is fairly range-bound. The virus worries in equity markets continued to offer support, said Ryan McKay, a commodity strategist at TD Securities. Global central banks are offering stimulus. It should be noted that Donald Trump is going to address, I guess, everyone tonight about what they're working on, but they are working to provide legislation that will go through the Congress, and as to what that will entail, we'll find out. Gold is being sold when equity markets are having a bad day to cover margins. I think the story hasn't changed that much over a couple of weeks, he added. Globally, now we see this thing is growing. The Mexican cerveza sickness. The White House and Congress negotiated stimulus measures on Tuesday, and there's no immediate sign of a deal, but we will be updated tonight. We'll find out. Further supporting bullion, U.S. 10-year Treasury yields resumed their slide back towards Monday's record lows. The U.S. Federal Reserve slashed benchmark interest rates on an emergency move last week, half point, and they're expected to cut rates further when it meets later this month. Gold tends to appreciate on expectations of lower rates, which reduce the opportunity cost of holding non-yielding bullion. Earlier on Wednesday, the Bank of England made an emergency rate cut and launched a package of other measures to combat this sickness-driven economic slowdown. The European Central Bank is also expected to unveil new stimulus measures on Thursday. Meanwhile, holdings in the world's largest gold-backed exchange-traded fund, SPDR Gold Trust, held near their highest in more than 3 years. ETFs are reflecting investment, said Sonik Kumari, a commodity strategist at ANZ, adding that the lower interest rate environment and safe haven demand were boosting inflows. Palladium fell 4.4% to $2,312.62. Wow, it wasn't that long ago. It was over $2,700. It was quite surprising that Palladium was able to withstand massive headwinds from this thing for such a long time, so now it feels the pain of it, Commerce Bank analyst Carsten Fritz said, noting that declining car sales are expected to weigh down the auto catalyst metal. Platinum eased 0.2% to 860 cents, while silver fell 0.4 to 16.79. So there's where it is now. Looking at the gold to silver ratio, it is still very high here, 97.39. Really close. It did get over 100 to 1 a few days ago, very early in the week. But it eased back off there, but that's still a very high number there. And we can see here are the prices for gold, silver, platinum, palladium. Rhodium was down, but it actually regained its losses. Back up again to $13,000 per ounce. Crazy. It is immune. It seems to be immune from all this stuff. Whereas gold here is taking the same hit percentage-wise as silver. It's kind of unusual. They're both down 0.86% equally here on the day's trade. And again, the selling off, which means, it may turn around. If this continues, if we still continue to see the market go down by hundreds of points or even 1,000 points day in and day out, we may be starting to be on the precipice of another recession. Keep in mind, a recession is based off of, I think, 3 separate quarters of negative growth, GDP, and we've not seen those measures yet since this really started to hit home and had this effect. We'll find out. We'll see what happens with these stimulus measures to help ease concerns. Obviously, that half-point rate cut by the Federal Reserve was a Hail Mary, didn't do a darn thing. They might as well have done nothing. And in cases like this, the industries that are affected the most are going to be travel, obviously, and other things. More and more things are being canceled these days, from basketball games to entire nations, and even to the point where mortgages are being forgiven for a time period, and sick leave being paid by government putting money in to help ease the pain of the consumer. And, it's one of those things where, yes, there is some concern. We don't want to minimize this particular thing that we really can't say here without being penalized. But the other thing is to keep it in perspective. It's obviously very contagious. No question about it. It's obvious we should take the necessary steps to protect ourselves. Most of it relying on common sense. And the other thing in terms of common sense is to not panic in the markets either. And so don't panic when it comes to this particular ailment and how it's spread, and the understanding that what it is, it's the 19th iteration of this particular thing. Be careful out there, be wise, but also don't panic in terms of the of what's going on with the precious metals either. Us in this community, we're at the thing, okay, we see the dip here, it's dipped. Should we buy? Maybe, but do it on a regular schedule that you normally would buy. Don't overextend yourself buying precious metals, and also don't overextend yourself buying supplies, that you would need for a situation like this in case you have to be at home for an extended period of time. Prepare, but prepare as you would for anything else. And I think that everybody's better suited if they don't overly panic, and because you can get yourself in a lot of trouble financially spending too much money on something and finding out weeks later, oh, why did I do that? And then these prices fall back into normal levels again. Save for silver. Silver is going down, but it's hardly reacting. If I guess at anything, silver has probably been the smartest metal out there in terms of this type of thing, because it's not really reacting to what's going on with this particular issue. And it may be somewhat derived on this, but I think more or less probably the biggest thing of it, especially with the prices going down, is because of less demand for it, because especially when we talk about automobiles and auto manufacturing kind of staving off a bit here, that's going to hurt silver's demand, which means it might be a good opportunity to buy, but it's an opportunity to buy understanding the fact that it could go down even more. And so there you have it. So precious metals are acting weird today, but the markets are acting weird. Everything's out of kilter, and for good reason. And that just goes to show you that sometimes, there are exceptions to the rule. And I believe we're seeing that exception right now to some degree. But again, before any big recessions, we do see prices go down before they go up. Sometimes there's a deflation before a massive hyperinflation. And so keeping all that in mind, we will press on and see what the news of the day is. as we see. But again, the markets are down, and we're sitting here wondering what's going to happen in the coming days. Continued bull market is an opportunity to get in the stock market and buy. Some people are toying with the idea. I'm somewhat risk averse, but that's just me. I don't know if I would chance it, but there you have it. So post your thoughts below. Would like to extend a multitude of gratitude to you all for watching, and remind you that I do post videos on a daily basis, and encourage you to please rate, share, comment, and subscribe.